Mm. Can you hear me, Daniel?
Jules, I can hear you. It's me, Wally.
Oh, hey, Wally, that's good.
Yeah.
Thank you. I'm just trying to, Daniel's just trying to log in. So we'll be with you in a very short minute. So thank
That's
you.
all good. Take your time. That's all good.
Okay, thank you.
Can you hear me?
Yes, I can.
Oh, you just can't see me.
I just can't see you.
No.
Oh, now I can see you.
There we go.
Amazing. Amazing,
Yeah,
amazing. Cool. Okay. So we've just got a few people. We've got Wally has joined us. I've got my team joining us as well. And yeah, so
you need some pictures on your wall behind you, Jules.
Well, this is just my Canva background, but I've just put together like a little like talking sheet just so that we can yeah, go from there. And I was supposed to change the time, so it's Feb 2025. So yeah, just so that we can get started. And we're expecting between 10 and 15 people on the webinar, so that's
Right.
that's really great. So yeah, so we'll just give everybody a couple of minutes to log in, and yeah, and then we can get started. I haven't figured out how to share this as a presentation without it taking over my whole screen and not seeing everybody. So we'll just do it a little bit like this. And yeah, so welcome everybody that's joining us. We're just going to give a few people, we're expecting between 10 and 15 people, so we're maybe a few more. We've had a couple of last minute sign ups, so we're just looking forward to everybody joining us. So so just make sure you've got a nice cup of tea, glass of water, or whatever you need, and yeah, we'll be
Topic as it is, I won't blame a beer or a glass of wine. Or...
Oh, you might need a beer, wine, hard liquor, whatever you need. Get onto it. That's all groovy. So yeah, so we'll just let a few more people join in. And
I've actually got a beer pint cup, but it's got fruit juice in it. Promise.
okay, we'll believe you. We'll believe you, Daniel. So yes, yeah. So, and I'll make. Does everybody see? Is that clear for everybody?
Yeah.
I'll do it that way. Because yeah, I've got too big of a screen. You've seen my screen. It's massive. And it
It's
takes
the
the
room
whole
size.
thing, and then it's yeah. I don't think anybody needs it that big, but yeah. So thank you everybody for joining us so promptly. We'll just let it happen a bit. Usually,
Where's everyone signing in from, Jules? Are they local?
so we've got people from Brisbane, the Gold Coast, Newcastle, and Sydney, and Scone and Muswellbrook, and Coffs Harbour. So, so a nice big broad range of people, and our team over in the Philippines. So, which is super cool. We're doing this as a little bit of CPT training for them as well, to make sure that everybody is on track with what to look out for, so that we can serve everybody a little bit better. So yeah. So 2025. It's going to be a good year.
Time is flying.
Yes, it's going to be a good year.
Hopefully, with the interest rates being dropped today.
Oh, I was so busy getting ready for this and a few other things that I missed that. That's exciting news. That's cool.
Every little help.
Yes. Woohoo. So, yes. Usually I play, last time I tried to play music, I don't know, am I sharing my whole screen? I'm only sharing my window, I think.
Yeah, you are.
Yes. So usually I play Money from Pink Floyd, but I don't know if anybody can hear it if I play it. So yeah, it's one of my favorite songs to play when I'm talking about money. So right, so
people are slow joining.
They are being slow joining. Slow joining. So, but we can. So I reckon, because I know your time is super precious, Daniel.
No, I'm fine. If you're on Delaney, you're going out and doing dinner for the kids. So look, you can have me for 4 hours if you like, Jules.
No, family always comes first, Daniel. So yeah.
I think you've met my kids when they were very young. As they've grown up, you might not say the same.
Yes. Well, yeah. I think most people. Yeah. Okay, so I think what we might do is we'll give people 2 more minutes, and we'll get started.
So who's with us at the moment? We've got your team in the Philippines.
We got my team. I've got Diana, and we've got Wally.
I've just got one that says iPhone. That's Wally,
yes.
Is it?
Yes, so that's Wally. Yeah. So yeah. And we've promised everybody that we'll share the recording with them anyway, and the information sheets that you've got for everybody. So, but yeah. So
where's Wally? Where's Wally based?
He's up in Scone, and so this is more of a preventative mechanism. Yeah. So,
well, Wally, I've never had a presentation that I've done where it's caused a pox on you and your business. So don't fear that you're talking to an administrator, liquidator, insolvency practitioner that it's going to rub off and you're going to need me tomorrow. So just hopefully we can share some good advice with you.
Yeah. And then Diana is an incredible bookkeeper, so this is really good for her as well, to help her make sure that we do a lot of work with her as well. So so it's pretty cool.
Good.
So just so that you've got a bit of the background, and we've got a few people that I haven't yet met, which is a bit exciting. And I've just received a message from somebody that's saying that they're coming. So that's all good as well. But the 2 minutes is up. So Daniel,
okay.
I think we get started.
Okay.
And then people will join on. Oh, and I've also got people joining from South Australia, so they might be a little bit confused with the time as well.
But you're saying
So
you're recording it anyway, are you?
we're recording it anyway. It should be in record mode. Yes.
I'll be careful what I say then.
Yes, don't say anything naughty.
Yeah.
So, everybody that's here, I'll just do a quick introduction for Daniel. Welcome to our Smart Directors Steering Clear of Liquidation. So, this beautiful gentleman that that we've got as our guest today, Mr. Daniel Quinn. This is a beautiful photo of
You're
you.
young there.
You're quite young, and you still look a little bit like this in some ways. But you're a chartered accountant, registered liquidator. You're a wonderful dad and father to kids, and you've recently relocated back up, well, a couple of years ago, up to Tamworth and doing that lifestyle change. But you work all over New South Wales and Australia, really.
Yeah.
Your firm is Australia-wide. And the reason why we've got Daniel here is over the last, 6 to 8 months in 2024, we're starting to talk to each other quite regularly because a lot more things have been coming up, and there's been a lot more business crises. So we just want to make sure that we're being proactive with everybody. And so that's our wonderful man, Daniel Quinn. So, woo!
Thanks, Jules.
Thanks so much for being here.
That's no problem at all.
Yeah, so the style that we're going to do here, and did I miss anything out?
Not at all.
Not at all. So
other than I've been doing it for 30 years and I don't look that old, but thank you for bringing that up.
Yeah, well, you look like this. We've got the picture here. I've got proof. So 30 years experience, and so it's wonderful. The way that we're planning to do this is more of a discussion point, and so I thought that we'd just have this little page here available so that we can go through it. And if you guys have any questions or queries, of course, hi Suzanne, welcome to, we've just started, this is Daniel. So Daniel, tell us about what your role is. Like, what is it that you actually do? And are you the scary person that people worry about?
I can be. That's the answer. But most of my work comes from people like you, Jules, and lawyers who have clients who are suffering. And because then, whilst I'm acting for the people who are owed money, really, there's an opportunity through that contact, through an accountant like you, to not build relationships with the directors of the companies that are facing the problems, but to work a strategy that suits them. And that really comes from being proactive and coming forward early enough before it becomes so fatal that the problems just can't be solved. So things like this and discussing potential problems and highlighting issues to look forward or look out for is so important, because that proactiveness solves a lot of problems down the line. And we'll go through a few of those things. Can I just add as well, with being such short numbers, I know we're being recorded, I've got things that I want to cover. But if anyone's got any, I know Wally's there and Suzanne's now here, if you've got questions, please, I like to run things that way, because through those questions comes discussion.
Yes.
And we can then kind of work through a lot of the things probably that are on my list to get through to. No, I'm not asking you to come forward and give me a real life scenario, but just questions. And that education is key. So going back to your question, look, yes, I've been doing this for 30 years. I know it's a shock. But I started out life as you, Jules. General practice, giving advice, doing accounts, hated it. And luckily the firm I was working with had this business advisory mythical department which worked in this world of financial stress. And having a father that was a lawyer and attorney general of where I'm from in the UK, I just fell into that department and got legal qualified as well as did my chartered accountancy, but just enjoyed the assistance that I can offer, and not doing audit and tax anymore. Sorry. So I've just specialised in that area of helping, either avoiding the need to use me, which is part of the reason for today, but also if you do need me, to work it through in a way that we come up with a strategy that fixes the solution, or find a solution to the problem in front of me.
Yes, perfect. So, what do you see people coming to you needing? Like what?
At the moment, I think arrears in tax has always been a problem, but COVID exacerbated that 100 times. So we came out of COVID with 2 lockdowns.
So sorry, was the exacerbation because also like the ATO wasn't really chasing?
Yeah, they caused it. They caused the problem. We had clients after COVID who came to us and said, we had the money, be it a handout from the government, which was great, and the strategy worked, where we offered the ATO the payment they were after. And they said, well, no, that money you've received isn't for that purpose. It's to keep your business going. So they refused to take the payment that they were offered.
Yeah.
As a result of that, the tax debt that was outstanding went from $48 billion Australia-wide before COVID, during that 18 months of the various lockdowns we had, to 69 billion. So $20 billion increase over that period of lockdown. Which was fine, right? But until the government turned around and said, ATO, sort your balance sheet out. Either collect it or force liquidations to close down businesses so we can write it off our balance sheet, or get something back rather than nothing. And then that's then caused, the last 18 months I've been incredibly busy, as you know, Jules. We talked about the last 6 months, but it's been mostly due to that tax debt and the pressure that the ATO now is putting on in recovery. So they refuse to accept it, and now they've got a big set of clause where they're saying, pay me or else. And it's not good enough to say I offered it and you rejected it. They're now forcing closures.
And I like, we've been seeing that debt increasing, and it's also got people out of the habit of paying their BAS on time, because COVID did really push back some of the older businesses and gave them extensions and things like that. Which definitely
that's right.
meant,
so we'll come back to the ATO. The other thing I'm busy with is employment issue.
Okay.
It's a serious problem. I face it myself, and I kind of summarize it as it's just cost of living crisis. And I know we've had a tax rate cut today, which will help in some respect, and hopefully it will keep going. But as an employer, my staff want more money so that they can afford to live. But I can't afford to give them what they're after. And I run the risk of losing them if I don't pay them more. But if I pay them more, I've then got less to pay for my little shits of kids. So it's like,
well, not that, but it's less for you to less for you to pay for your cost of living, but also you've got a business to run, so you've still got your overheads, and the overheads are increasing, like the electricity costs and all of that. But then also we're seeing a lot of our clients have, when the pay increases are happening, but they can't increase their sales price by the same marginal rate as what the minimum wage cost for those that are paying on award.
That's right.
Are you seeing that as well?
And again, being a business owner, and my wife. So whilst I'm a business owner, I'm an employee, really, even though I'm an owner. So I'm on a fixed salary. My wife's the same, on a fixed salary. There is nothing we can do to earn more money. Now, if I was a sole trader, I'd go out there and I'd just work a bit of overtime. I might lose a few hours on the weekend with my children, but I can earn more money to be able to generate more money to pay increases in bills or labour costs or overheads but when you're fixed in a salary, you're reliant on your employer giving you more money, which means it's really out of their pocket.
Yes.
So that's a big stress at the moment.
Yeah. So it's
Yeah. And I'm finding a lot of companies needing my help who just close down their company and just become an employee themselves.
Yes.
And they turn around, and it's happened a few times. I'm going to be someone else's headache.
Yes.
I'm going to go to them and demand more because that's
Yeah.
what my employers are doing to me.
Yes. Yeah. And it takes it makes it an easier life.
Yeah.
But it's also it's harder to it's definitely, all these constraints are putting a lot of pressure on people to make more money in their business.
Yeah. So they're the two main things
to be able to pay their tax debt. So it becomes a vicious circle.
Totally.
Would you agree?
So they're the two main things, and I think they're interrelated. It all comes down to the financial stress on the company through either tax debt that might have been a legacy from COVID, or it might be that they're using that money to help them trade through those things that I've said, like, I'm not paying my taxes because I've got to pay these extra bills. Labour's gone up, all these other things gone up, and the tax man is very, very ruthless at the moment.
Yes. So what would you be looking for when you're like, so you've got these constraints. What are you looking for when a client comes to you? Are there any telltale signs, anything that's, Yeah,
I mean, the things that, look, it's on any job. So if any new client comes to me for advice, or your clients come to me through you, and even if it's a liquidation and it's already happened, we've got to look through and find out what either they should have seen as an indicator of a problem, or help them sort through what those indicators are. Now, sorry, Wally and Suzanne, you run a business, your business better than anybody, right? But if you're continually making losses, well, that's a highlight that something's wrong, right? If you have cash shortages and you are teaming and lading, it's called in the accounting world, kind of borrowing from someone and not paying them to pay someone else, it will catch up at some point. And they're the things we look at: delayed payments, kind of, are we paying things on time or not? We also, so that's the cash side, but we also look at the balance sheet. So we look at things, or I ask you the question: if you were forced to close today, or you made the decision to close your business, you look at cash at the bank, you look at what receivables are going to be collected still, or stock that could be sold, assets that could be realized, like you might have equipment finance to pay out, but there might be a surplus. If you sell everything, is there enough money from all that sale to pay all the liabilities back? And by liabilities, it's the tax debt and the employee entitlements through closing. And if the answer is no, you kind of, there's cash flow insolvent where you can't afford to pay your ongoing debts by the cash that's coming in daily. But also there's a balance sheet test of insolvency where you go, let's pretend we've closed, sell everything. Have we got enough money in the bank to pay everyone back? And if the answer is no on that, that could be a bit of an alarm that something's wrong in the business.
Yes. Okay.
So, yeah.
So can we back up just a little smidge? You're using this word called insolvency.
Yeah.
So just to make sure that everybody's aware, and like what does it mean? Like, can you be insolvent if you're starting out and you haven't yet got the money coming in, but you've got bills going out? Like, at what point would that become insolvent versus somebody that's got sales coming in, but it's just not enough to pay the bills?
Insolvency.
Or what is insolvency?
Insolvency really is just, can you afford to pay your debts when they fall due?
Okay.
Right. So that's taking into account trade terms. It's taking into account everything else that you might be able to get. It also takes into account your ability to borrow more money to pay those.
Yeah.
So as I said, it's you run your business and you're there firsthand running it. If you know that you're reliant on that sale to pay a bill, but then you're then still falling behind with your tax debt, well, clearly that's a trigger that things aren't quite right.
Yes.
Yeah.
So what if like we've talked about this in the past, my favorite topic, invoice factoring.
Yeah.
So I've come across a few people that, so invoice factoring is when you have a sale and you've got a facility with a bank or another provider, and they basically give you 80% of that sale up front before you before the terms. So it might be 7-day terms or 14-day terms, and this provider is going to give you that money up front. And I've seen that get really, really scary. People are using it like they're like they've got to make the sale, get the invoice out. They don't care if the customer's going to pay it or not, if they're going to be a slow payer, and they don't understand the impacts of it. Is invoice factoring something that you see as a big red flag?
It is. I will quite honestly say that I don't like it. I see its use and its purpose. For example, let's pick on Suzanne. She runs a business where she has a main customer and various other smaller customers. And the main customer pays always on time, but it's a 40-day term and you need that cash quicker than that. I would, if I'm going to use it at all, I'd pick on the one that I know pays without fail, right? But I wouldn't use it on the smaller ones. When I see debtor factoring or finance using every single book debt they've got, that's the flag.
Yes.
Right? Because they are so reliant on that it is an issue. And the issue is getting out of it.
Yeah.
If all of a sudden things fail, it's a very expensive exercise to get out. They've got large penalties to get out of the contract. But also, if things become better in the future, you've still got that penalty to pay.
Yes.
So reliance on debtor factoring is an issue.
Yes.
But I just steer clear of it. It's essentially a way in which you fund your working capital.
Yeah.
There are cheaper ways to do it.
Yes. Okay. Right. And what about so you've given me a couple of little pointers and stuff. So what about overdue taxes and all of that? Tell me some of the risks with that and things to look out for and red flags for somebody that's starting, like, let's just imagine that we're starting out, we've got a new company, and we just want to make sure that we don't get into hot water and
the
access our
take
personal
home
assets.
taxes is irrespective of being able to pay your tax, you must lodge your BASs and your IASs and your superannuation guarantee charge, even if you can't pay them.
Yes.
The
Okay.
reason for that is that there's more of a penalty from the ATO if you don't report than there is if you don't pay. Right. And that is, quite honestly, what do I do as a liquidator? I recover assets of a company that closes for the benefit of the creditors of that company. And if we all think back to, if we've all done any business kind of exam or whatever, running a company means that you've got this corporate veil, which means that any debt of that company is that company's debt, not yours personally.
Yes.
The ATO has the ability, and they're the only creditor to do that, unless you've signed a personal guarantee, like with equipment finance or Bunnings for a supply account or whatever industry you work in, that they can convert a company debt that is solely company to be your personal debt as a director. Right? And there's two triggers of that. One is if you have lodged everything on time and the ATO just get annoyed that you haven't paid them anything, they can issue a notice called a direct penalty notice that gives you 21 days to do something. Now, that in that 21 days, you can pay it if you can afford to. You can go into liquidation. You can go into one of these new small business restructure regimes, administration. You can't get into a payment plan because it's got that severe. But if you do one of those four things, the personal obligation just goes away. So let's say you owe 100 grand to the ATO. If you don't do anything within that 21 days, personally, you owe 100 grand. You can't get out of it. You've got to pay it or go bankrupt.
So the way to avoid that personal liability
Lodge.
is to lodge, but not to lodge late, but to lodge on time.
Yeah, so I'm coming to that. If you
So-
lodge 3 months late, so let's say you need to use me as a liquidator.
Yeah.
And historically, you've been late with your lodgements. You've just ignored what your accountant said. And even though they're ready, you've just not lodged them because you've been fearful of letting the ATO know that there was tax he couldn't pay. If you're 3 months late, it's personal anyway. They don't need to issue with a notice. So you could go into liquidation thinking, oh, my tax portal was only 10 grand, it's all good. But because you haven't lodged them,
yeah,
you owe the tax that should have been notified.
yes,
So that's the biggest thing.
yeah.
You know, so if you lodge and it's 500 grand that you owe, fine.
Yeah,
But
so if you
haven't
lodge
lodged-
on time, and you've got a 500 grand ATO debt and you've
It
done
stays
all
with
of
the
that
company.
correctly, you've lodged it, you've reported it correctly, but then, you know, a cash flow or stuff like that happens and you can't actually pay your BASs, it's much better to get it lodged, get it signed off by like if your accountant has prepared it, get it signed, get it lodged on time or before time.
Yeah.
And
But
then
if you're 3 months late,
if you're
nothing.
3 months late, yeah, it's tough titties, as I like to call it.
Yeah.
So and don't lodge, so if you're in that situation, there's potentially things that you may or may not do. But if you do lodge it 3 months late, then you need to know that the business has to pay it, because otherwise your home, your boat, your car, whatever is on the line because the ATO is coming knocking.
And my role is much easier talking about the liquidation of a company than it is talking about bankruptcy personally.
Yes.
Yeah, because that's what that conversation becomes, because you could liquidate the company, which would have solved the problem, but now it's not going to solve the problem. And we're now talking about personal assets and them being under attack through bankruptcy.
Yeah. Can we also talk about superannuation then? Because I know that is another thing that can be.
That's right. So superannuation, again, is down on lodgement. So if you are late with a superannuation payment, you've got the requirement to lodge a superannuation guarantee statement. Exactly the same with the direct penalty notice for POIG and GST. So if you haven't lodged it or you've lodged it late, personal.
Yeah. And with the superannuation, one thing that I see people getting tripped up on, and I'm not sure if you get people tripped up on it as well, is, so say it's due on the 28th of July and they pay it and it's come out of their bank account, like their business bank account, on the 28th of July, but it hasn't cleared with the employees' super funds.
Yeah.
And we talk about those 2 dates. So it might clear the super funds 14 days later. Is that on time or is that still a late payment?
Superannuation is a very, very, this isn't being evasive in my answer, Jules. Superannuation is a very topical thing within the insolvency area at the moment, because again, it's even when it's gone to a superannuation guarantee and directors have paid the super funds, they should have paid through the superannuation guarantee account, yet the employees have received it, and yet it's still showing as it's payable on the superannuation guarantee. So the ATO still chased the superannuation guarantee statement. So look, I don't know the answer to the question you raised, because it is.
Okay, well, I'll give you the answer. So I was kind of leading you on it, but it's really important. So for it to be on time in ATO world, it's actually that it hits your employees' super by that due date. So if the due date's the 28th of July for the June quarter, then it needs to be in the employee super funds by the 28th of July. So that usually means paying it 2 weeks out of your business bank account. So making sure your cash flow is 2 weeks in advance of paying that superannuation, because otherwise then it triggers the personal guarantee, that the company can pay that personal guarantee, like the super guarantee charge. But if it doesn't and it goes into liquidation, then my understanding, Daniel, that's when it becomes a personal director's assets, director's personal assets are on the line.
Because they've been late and they haven't submitted their SCG.
Yes. Yeah. Perfect. Is there anything more to add on those two areas?
Non-direct penalty notices. They are very, very, very active, the ATO on. And they're just issuing them. They're sending the 21-day notice to do something, or they are just, or they're catching people out who. The ATO know more about us than we know about ourselves. That's what I often say to people. They know the businesses that are trading. They see the activity through other companies you're trading with. They're trading with you.
Yeah.
So they know whether or not you can afford to pay it or not, or if your business is viable enough to offer them something.
Yeah.
And they seem to be just kind of, I won't say picking on, but yeah, let's use that word. Those businesses that they know are the easy target.
They're targeting it. And if you do get a director's penalty notice because you haven't lodged your BAS and that is now a personal liability, and you don't do anything in that 21 days, what does the ATO do next?
What can
they do next?
That's called a lockdown director penalty notice. That means that it's always locked down, it's always there, and there's no cut-off date for it. So that could sit there for 20 years. And the ATO haven't enforced it. They just know that they've got the ability. If you go into liquidation, it's like a caveat on a house. They've put an extra level of security over the director to know that if anything happens with that business, they're going to get their money back, or some of it, or force you into a personal bankruptcy situation to write it up.
Or they'll garnish it. They'll garnish your company accounts, your personal accounts. If you, as a person, so we've recently had a client have this happen to them. They didn't update all of their addresses, and they came to us, and we didn't get the documentation, and neither did the client. And then the ATO started garnishing, but the client not only had the director penalty, but personal ATO debt. And when you get a garnishee, even if it's come from your business account, it will go against your individual debt in an order of what the ATO prioritizes. So you could have like $100,000 garnished from your company bank account, for example, and it actually doesn't get applied to that original director penalty notice.
That's right.
It can go against your personal
and
ATO
I'm seeing
debt.
a lot of that as well. So between director penalty notice and garnishees, I get phone calls every day. I had a few today. My bank account's had money taken out of it. Phone the bank, the ATO had issued them with an order. And just for Wally and Suzanne,
they issue the order by snail mail, so they do it on paper, but it's in real time with the bank, and so the client and us usually don't find out for a week. Like we don't get the paperwork for a week later, but it's already been taken out of the bank account. So so it can get very, very messy, very scary.
And money that you thought you had to trade with is gone.
Yes.
So I know we're moving on to budgeting and things like that, but how can you budget when you can't budget for an order that you've received where they're taking 20% of your balance that's in the bank?
Yes. Yeah.
Yeah.
So how do we avoid it? So far we know that we we pay our super on time, we lodge our BASs on time every time, no matter what.
Yeah.
But what other things can we do
Look,
as business owners?
it sounds very, 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 very simple. And it comes down to cash flow and budgeting. But if I had $1 for every time I've had a job and I've said, can I just have a look at your cash flow budgets? And they'll go, huh?
Yeah.
And more often than not, businesses run their, or companies run their businesses from the bank going, oh, look, I've got 40 grand in there today, 10 grand in today, however much is there. That means I can afford to pay that without actually realizing that there's a more important bill that's due the next day. Or they haven't taken into account that their Origin bill or Telstra bills quarterly, and all of a sudden then they're cut off. Running that cash flow is very important. I actually run one personally for me, and it kills me when I look at it and I think I might have $1,000 in the bank and my wife's been shopping, because all of a sudden it's like, well, if she'd have looked at that spreadsheet, she'd have seen tomorrow that I had this thing to pay for that's highlighted there, and I haven't got the money there anymore. And the knock-on effect of that then through the cash flow is that I've got to wait to listen. What if more bills and things come through? So running a very, very tight cash flow, and it all comes back down to when I first did my first ever accountancy exam, and you'll remember this, Jules. You were always told
we set different exams just to tell everybody.
I'm quite a bit older than you. But all the reasoning's there. It's like whenever you're looking at it or auditing, you're always looking for exaggerated income and underestimated expenses.
Yes.
So when I run my cash flows, I do the opposite.
Yeah.
I'll always overstate
your expenses,
and I'll go to my income and go, well, that might not come in, or it might be a third of what I think I'm going to get. And if it works out to what you're expecting, well, great, your figures are even better. But at least then your lesser income's covered your expenses, and you know that if things fall like you hope they do, that you're not going to need me because you've got enough money there to pay them. So it's really, really, really important.
So what if you what if you're so your expenses, you've got a good handle on your expenses, but your income, your sales, you might be, so I know, for example, Wally is in pharmacy, so he doesn't know every day what his sales are going to be. He knows what he would like it to be every day, but like how would you?
So when it comes to income, look, I was once told, okay, well, how much do you think you're going to bring in income this year, having done like 200 grand the year before?
Yes.
And I said $3 million. And my partners at the time were like, what do you mean? I said, well, I'm always going to try and sell. I'm always going to try and bring work in. I don't know what it's going to be. Yes. You know, Jules might not have a job for me for another 3 years.
Yeah.
So it's very, very difficult to best guesstimate sales. Very difficult, even in the pharmacy world. I don't know what Suzanne does, but you can't say that someone who's going to walk into your shop is actually going to buy anything. You just hope that they do. So in some respects, you've got to go on kind of best guesstimate from past performance, or what did December look like last year? But I'd be going on the basis that it's either going to be the same, or let's knock a few percent off and have a worse month, because erring on the side of caution with sales is better than not, because we'll make more money and the cash flow will look much. We're not going to need Daniel if things go like last year or better. So let's just estimate a little bit under and see if we can still make the figures work.
Yes. Okay. So but if you're starting out and you're brand new, you haven't got any of those. How do you put a cash flow together?
Well, firstly, good luck.
Yeah, like if you haven't yet had sales, you don't have sales history, you can't look at last December because you've not had last December.
Look, I think there's got to be an element of due diligence done before you start a business. You're not going to suddenly go out and sell widgets if you haven't worked out that people want them.
Mm.
So you're going to have to do a little bit of work before you get started to kind of understand, kind of like cafes in shopping centres. You know, you go in there and you count foot traffic. You Main Street here in Tamworth, where I currently am. You know, you're not going to open up another coffee shop. There's enough of them.
Yeah.
You know, so you got to pick your battles.
Yeah.
But working it out, you've got to. Well, I just put it down to due diligence and thinking about it. But it is a guess.
Yes. Yeah.
Yeah. You've
Yeah.
got to be an
So-
educated one.
Yes. Okay. So Suzanne's got a question for us.
Go on, Suzanne.
So Suzanne, do you want to ask it, or do you want me to read it out? Oh, you're on mute at the moment, so
There we go.
okay. So
Hello.
Hello.
Nice to put a face to the name.
Thank you.
So, where do I sit if my personal and my business accounts are all with the same bank?
Yeah, that's fine.
Yeah.
Going back to what I said, the company is its own individual,
Mhm.
and you're an individual.
Yeah.
So the bank can't kind of cross between the two.
Mhm.
The only crossover that's there is if you've got an asset. Let's say your personal home is cross-collateralized by the bank. So you borrowed against your property for the company with an overdraft, and then you've got your own personal bank. Well, clearly the bank will see the company as being somehow secured by your house, but your personal funds in your bank account are totally fine.
Mhm. Okay. I don't have a house, by the way.
Yeah.
cool. Excellent question. And I think sometimes business owners can get a little bit scared about, like it's easier because they can go between their personal and their business. I find it's oftentimes better to have them separated because they can go between their personal and business so easily. So you don't want to accidentally be spending business money when it's personal money.
Yeah.
So
with a few from, if I ever need to get involved, I'm just dealing on, if it's just a company I'm helping with, my letter to the bank, for example, would be Suzanne's business is in trouble. Close that bank account. They wouldn't close your personal one.
yes. Yeah.
Yeah.
Yeah. Cool. So, and the other thing that we haven't talked about that often traps, not traps, it makes people stumble a bit, is especially if they want to have a supplier that is a much bigger supplier, and that is director guarantees. Can we talk about what a director guarantee is and why we always want to not sign them if we can get away with them, but sometimes we do have to do them?
So going back to one of the comments that I've said, where the ATO is the only creditor who can turn a company debt into a personal one. What suppliers do, I always pick on Bunnings whenever I'm talking. You can't get a Bunnings account without signing a personal guarantee. Now, essentially what that means is the company is getting supply from Bunnings on credit. And what Bunnings do is they make you as an individual, as a person, sign a guarantee to say, in the event that that company closes and the company can't afford to pay us back, you owe us the money personally. So if the company goes into liquidation, the Bunnings get nothing back, and there's a $5,000 outstanding amount to Bunnings, they'll just give you a ring and just say, well, fine, the company's gone, but you've signed that contract where you personally owe us that money. Now, it's difficult these days to get supply without a guarantee. And some suppliers just have a limit. So if you went over $2,000, they might get you to sign a guarantee. Some might be 10, some might be our standard procedure is we'll only supply to you if you do. It's becoming less frequent now where I'm dealing with suppliers in liquidations where there hasn't been some element of guarantee that's there.
Yeah, right. So that
Yeah.
guarantee, so let's talk about, so we've talked a lot about like companies and liquidation. So liquidation is kind of, you can't pay your debts, you've done everything that you possibly could. We've reached out to Daniel before we've become insolvent. So before we can't pay our debts when they fall due. Maybe with the exception of the ATO, but like, because it seems to oftentimes come when it's the ATO debt, and the ATO always oftentimes allows people to have a payment plan in place. But if we have all these other things, like, I think in the past, a lot of people had, and it used to be that if you had a company, your personal assets are always protected because it's limited liability. But there now seems to be more and more ways that directors can get tripped up and be on the hook.
So you've got the director penalty notices. I'll give you a live example. I won't mention names, obviously. A electrical company, or electrician ran it as a business, ran it as a company. He probably got too big too quickly, and took on 2 apprentices. And for him and his 2 apprentices, he bought them both new Hiluxes. So there's 3 Hiluxes, and he had large trade accounts with whoever supplies Reese or whoever plumbing. Now he came to me for some insolvency advice, wanting a liquidation. But once we kind of looked through everything, look, the vehicles would sell for less than what the payouts were on their finance. So he's personally guaranteed the shortfall on those equipment finances. And with the plumbing company, with the electrical company, the main supplier, there was no stock left to give back to them. He just had a whopping great big 30 grand liability to them.
Oh gosh.
That he personally guaranteed.
Yeah.
So for him, liquidation would have kind of closed the company down, but it would crystallize the 3 shortfalls on the Hiluxes and the supplier account, 30 grand. So let's call it $100,000 personal exposure. Plus he had an ATO debt and hadn't lodged his BASs within 3 months. Add another 100 grand to it. So the closure of his company has led, or will lead, to a $200,000 personal exposure that he's got.
Yes.
Yeah.
Okay.
So you can liquidate, but all it's going to do, and the liabilities there, is that he's then facing a personal situation where he either has to pay 200 grand, but he hasn't got assets, he's got nothing else. He's he's going to be an employee. There's no way he's going to be able to pay 200 grand back. So he's now having to look into personal bankruptcy.
So what is personal bankruptcy, and how's that different to?
So what we've talked about so far is liquidation. Liquidation is the closure of an insolvent company. And bankruptcy is essentially the same, but for you as an individual. So as an individual, you can't pay your debts. There's alternatives to bankruptcy. Let's deal with the worst case, which is bankruptcy. But if you can't pay your debts, you file for your own bankruptcy, or one of the people you owe money to will make you bankrupt through a court process. Now, bankruptcy in Australia is a 3-year process where you're bankrupt for 3 years, and there's very strict conditions attached to you being bankrupt. So you can't own equity in property. You can have a vehicle that's got, you can finance a vehicle, but it can't be worth, or the equity can't be more than, let's call it $10,000. You can't be a director of a company. You can have your own ABN and run a sole trader. And there's restrictions on what you're allowed to earn. Now, you can earn $1 million, but depending on how many children you've got or dependents, there's like a sliding scale of the threshold you're allowed to earn. So let's say you've got no children, you might be able to earn after tax, let's call it $65,000. And the scale goes up for the number of dependents that you've got. And anything over that after tax, half of the amount that's the surplus gets paid to your bankruptcy trustee. So they're the main little bits with bankruptcy. There's other myths like you can't travel, you can, and things like that. But it's really just the restrictions on your earnings, and not being able to have equity in property and no more than $10,000 equity in a vehicle.
Yeah, right. Okay.
But after 3 years, the flip side is, and the good part of bankruptcy, is it's an opportunity, fresh start, and after 3 years, your debts have gone.
Yes.
So in 3 years' time, you're debt free, and you start your lives again.
Cool. So that also means you can't get a loan. Your credit rating would be tanked.
So it's on your credit rating for like 5 years or 4 years after bankruptcy, so 7 years in total. It's always there. If someone pays for a search on the National Personal Index, they'll see that you've been bankrupt. But look, I'm a big advocate in bankruptcy being fresh start. And if you run into that trouble, that's what it's there for. I wouldn't do it if it wasn't. And let's face it, you after 3 years of bankruptcy, in some ways you're a better lend for a bank in that you haven't got the old legacy of the debt.
Yes.
So your serviceability is much better.
Yeah.
But it's just it's just a process that's there, and it is on your credit rating. And lower tier lenders think like me, but the big banks could probably not lend to you for that 7 years.
Yeah. Okay. So then I think the only other thing that we haven't talked about is director loans from the company to. So the company to the director, not the director loaning money to the company, but this is one of our favorite bugbears.
Yeah, that's the word I was going to use.
Yeah.
Some accountants think it's really good practice to not let directors take a salary. And I can understand it. It means you don't pay super. It means you don't pay
payroll tax,
wage tax, payroll tax. But in the event that things go south and it ends up with me, if there is a loan account that is repayable to the company by the director, it's an asset. And what's my role as a liquidator? I recover assets for the benefit of the creditors as far as they're able. So the nice little thing that the accountant's done for you in creating a loan account to try and get you out of paying wage tax and payroll tax comes back and bites you in that I've got to try and recover the loan. And there's ways around it, and there's other things. We're very friendly around it all, but equally we've got to chase the loans. So it's a double-edged sword. And the idea might have been that it's in lieu of wages, and there was always going to be a dividend that's paid to kind of net it out at the end of the day. But if that doesn't happen, it's a whopping great big debit loan account that's there on the balance sheet as recoverable.
Yes.
Yeah.
Yes, and oftentimes I think people think that like if things do go south and we do have to reach out to you, they go, oh, but it's one of those unsecured Div 7As, or oftentimes we'll get a client that comes to us that has come from another accountant and there isn't a Div 7A loan agreement, so they've just been drawing the money out. So so if you draw the money out of the bank of the company in your personal name, like, so you're trading as a company, it's got lots of cash in it, you draw it out and you put it on your mortgage or whatever you want to do with it, and you don't pay that as a wage, that's the kind of director's loan that we're talking about, right? And it's because the company is a separate legal entity to the director. In this instance, it's considered a loan. So and then it can start to snowball because you're paying yourself a wage, you're still drawing money, and so you're not living within the wage that you're getting potentially. Which is only saying that you as a director not being great with your personal money, which and that in itself is a red flag. Would you agree?
Yeah, totally. Yeah, look, and again, it's not so bad. Let's say that I get a job and the loan account is $200,000 that the director owes the company. Now, if that's accrued over 5 years, if that whatever that is, 40 grand a year, and the director hasn't taken a wage as well, well, really, you can see what the reason for it was. It was 40 grand a year, salary by way of loan. But if the director, and I see it not that often, but I do see it where the director has actually taken wages off, let's say 100 grand a year, but has also taken a loan of 40 grand. You know, we've got a little calculation we do over bit of inside information here over what a reasonable salary should be depending on what trade you work at. But if that is 100 grand and you've taken the 40 extra, well, that has to be chased because I'm acting for the creditors.
Yes.
But
Yeah.
if it hasn't been 100 grand and they've only taken 40, well, again, it's still wrong, but it's an easy, explainable situation.
Yeah.
You haven't,
Yeah, so
whilst you've got a loan account, you haven't taken more than what you should have.
Yeah. So if in doubt, talk.
Salary.
Yeah. If in doubt, draw a bigger wage. Don't do the don't draw the money out of the business without talking to one of the team, like your finance professionals.
And if you take it as a salary, lodge your AIS so you don't get your director penalty.
Yes, so you don't get the director's line on the director's penalty. So yeah. So I think we've kind of covered everything, Daniel. And
I think we have. Look, as I said, I can
anything
talk all day. You know that. Because I'm very kind of passionate about what I do.
Yes.
You know, for many reasons, but look, I'm happy to take questions. I'm happy to be contacted. That doesn't mean that you need me, but if you just need a bit of kind of help on kind of direction or where things could possibly go wrong, look, I'm more than happy to help anybody.
Yeah, perfect. Does anybody have any questions? No, so that looks like it's a thank you. See you, Diana. Thank you for staying. And I'm just going to switch off my music alarm.
I can hear your music now.
Can you stop? Oh, shush. Sorry.
Thank you, Suzanne. Thanks for your question.
Yes, thank you. So if you ever need to contact Daniel, here's his details. And I think you said that you've got some pamphlets that we can send out to everybody that was on the webinar.
I've got just those early warning signs, a bit of information about director penalty notices. It always seems to be kind of nasty stuff from me, but it's there for a reason.
Yeah, and I think that, like you said early on, right at the beginning, the main reason why we wanted to do this webinar was as an education piece. So how to be proactive and not get yourself into hot water by accident. You know, like oftentimes we think we're doing the right thing. And
but I'm even happy to share, like I mentioned, that I've got my own personal cash flow. Clearly, I'll change some figures. But I'm happy to share. That's just a detail of me, what I do. Running my own life.
Yes. Yeah. And it's just
like I give that to clients all the time. As I said, I change the figures. Just to show them, you know, that I'm supposed to be someone who knows what I'm doing, but I still have to run something like that.
Well, I think even Barefoot does it. You know, Scott Pape, he's very much about that sort of thing as well. Like, make sure that you use the separate bank accounts for those things. So so well, thank you so much, Daniel. I really do appreciate your time. Thank you, everybody, for joining us. And we'll send this out. Yeah, we'll send this out to everybody that signed up for it. I don't know where they went, but they all said that they were coming. So, but hey, it's thank you so much for your time. I really do appreciate it. See you, everybody.
Bye, Suzanne.
See ya.